Good morning, everyone. Today is Tuesday, March the 21st. Apologies for my somber tone. Feeling a bit under the weather today. What do we got going on? We have a lot of movement up. I think the general thought process is that people who are short really want to get out of the market because it looks like we're in the midst of a squeeze. And so the volume is very light in the pre-market, but the traders are really thinking to themselves, hey, if I'm short, I better get out of here. Versus if I'm long, I want to stay in. So what my suspicion is that traders are leaving the market who are short and they're being pushed out versus people saying, hey, I'm going long. Right? And this is for big money. Trend still down on the daily perspective. Are we building a flag? Well, I don't know. Maybe it's a broadening formation. Here we've got a 3 and then a 2. And then here's another 2 for those of us that follow the strat. Could it push us out from that level? I think the pullbacks will be buy zones. I don't think people want to miss any kind of run. They're already behind the curve, and so they're just looking for this upward motion, and they are looking for a Fed that says, hey, I'm going to run back the rates. And so, the levels below, you want to look for 39.91 in the ES. As baseline support with maybe 39.96 to give you some cushion. Pullbacks are buy zones, so you sort of want to look there. But if it exhausts up here at the top at 40.35, we could see a trade that just pulls us all the way back down into our range during the day. This does feel like algorithmic motion to me. It doesn't really feel like traders rushing in because they feel like something fantastic is going to happen, and the FOMC is tomorrow. So these are the things that we have to be very careful about. If we take a look at the Qs are doing absolutely fabulously. They are coming around to a topping formation, and this top hasn't been seen in several weeks, probably 7 weeks or so. And this topping event could mean, hey, you know what, let's come in here and just settle in. And so support lines for the NQ, 12,685. Resistance, 12,811. If we get into that space, break up over it, and immediately begin to reject, you're going to have to look for a short. Okay? In terms of a pullback into more buying pressure, because we are seeing upward motion, right? We are seeing from these weekly charts, we're seeing traders that are coming in and saying, I'm going to put a line in the sand and see if I can go higher. All right, for SPY, we're up at that 397 area. That's fairly solid resistance, right? If we pull back into that 394 zone, it's going to be a very likely area that traders are going to try and bounce off of. And so the nice thing for this chart, based on the positions that we have, is if it would exhaust in the early part of the morning up at 398 and then turn around and sell off for the rest of the day. As I mentioned, pre-market volume does not always give us direction. We're going to have to see what these opening ticks look like. For those of us running the Qs, looks just like, the great lines in the sand from the NQ. 309, somebody's put on a really big call position into that area, but we are expecting them to pull the profit off sometime today before the Fed. I just don't see this information making us rally. I don't know why. So it's nothing more than checking the wind for me, but that I just wouldn't want to be Jerome Powell at all. All right, so levels to watch: 309 resistance, 305 support for the Qs. And, all I can say is trade small and wait for the deep dips that you can see on your daily charts. And this works for any instrument that you might want to trade. All right? Good luck today.